Good afternoon, everyone. My name is Brian, and welcome to Copycat Trading. Today is Tuesday, January the 16th, 2024, and here is a daily market brief video. All right, as we start off and we take a look at the spiders had a down day today, but finishing the day down by 0.37%, and just a meandering. We still have an inside bar pattern here of a move up and in spirit of bull flag. We don't have anything that is really necessarily concerning right now. The market is still in a good uptrend on both the daily and on the weekly, and so we're good and in a good position right now for the market to still go up and to take out its all-time highs. Same viewpoint as the last few days, that the market still has its view or its eyes up on that all-time highs. We do have the negative divergence here, or the divergence away from the all-time highs. Notice that the pricing is going up here and making a higher high, but yet the RSI, or the relative strength indicator, is actually decreasing. So that is a divergence that we want to just kind of take a look at and to notice in our daily analysis, telling us that something could happen. And I showed you yesterday in yesterday's video how that in previous times, whenever that occurred, it was right before a big drop. So it could happen. But at this point, we are still having, we still have to have our biases on the positive side as kind of a in spirit of bull flag, that it's staying in this channel right here. And whenever typically price action stays in a channel that is flat or that is sloping at a good angle, in other words, it's not, can't be sloping too much, but as long as it's flat or sloping at a good angle, it's getting poised to move to make another up move. So it's probably looking to take out the all-time highs, but we'll just have to wait and see. With this divergence here, that is one negative that we have in the market. And of course, there are fundamentally all kinds of other negatives that are out there in the market, having to do with the Middle East and Ukraine and all kinds of things with the Houthis, and just one thing after another that could send the market into a spiral downward. But at this point, it's looking like we're in consolidation as far as technically goes and going up. Fundamentals can always overcome technicals, but technical analysis always overcomes fundamental analysis. So whenever we're looking at something, we always want to err on the side of the technical analysis and not the fundamental analysis. Fundamental analysis always gets people into trouble whenever their feelings get involved. Technical analysis is just looking at the charts and interpreting what the charts are saying. All right, so let's move on. QQQ, which is the NASDAQ and NASDAQ ETF here. QQQ, same exact story here. We had a little bit of an up day, though, so we were down. We were still down, but we had a green candle, and we were down 0.01%, so just barely down, not a very much down day at all. And this is the all-time highs. So it's got the same exact pattern as what the spiders do, and it's just got this parallel channel that it's holding in, and it looks like it's getting ready to break up. Now, if the QQQ breaks down, it's got this lower area here of support, probably starting where this pivot high is and coming into these areas here where it's support. And I could probably move that up. That's probably just a little bit too wide of an area before it would get a significant bounce. And then, of course, you've got the gap down here. And, of course, that is all predicated on what the volume is. And going back to the spiders, the volume today was 84 million. So moderate volume, not light, super light volume, not heavy volume, but 84 million is just not that much. And you can see via the intraday, what we did is we just meandered down and then up and then down and then up and then down and then up again. So we're doing about the same pattern every single day. This candle right here, where there was a big sell, was where one of the Feds came out and spoke and sounded a little bit hawkish, and then evidently the market interpreted it right after that as a bullish statement, so it just came right back up again. So it wasn't really a significant day one way or the other. All right. Moving on to the Russell. The Russell broke that bearish consolidation we've been talking about the last few days, how this down move and then bearish flag been kind of happening. It's actually in spirit of bear flag, just this bearish consolidation, and then it broke through that. So that is a negative for the Russell. And its 50 MA is going to be its support. We've got the 382 retrace after that. That's going to be support, but its big support is going to be down here around the 50% retrace and all this consolidation down here. So we're bearish on the Russell and we're bullish on the SPY and on the QQQ, but we'll see. We'll see how things work out in the coming days. The Russell is very easily attracted or influenced by the overall S&P 500. All right, as far as gold goes, gold had a down day today, finishing the day by 1.29%, and the gold chart basically looks exactly the same as what it has for the last few weeks. If you look at the weekly candle, you've got this big up move here and kind of an in spirit of consolidation move going on. It could be consolidating for going up, but you could also interpret it as that you had this big slam down move after it tried to poke up in pre-market trading here, and you got the sideways consolidation, which is bearish, and it could roll over. One way or the other, you still have the inverse head and shoulders for a gigantic move up, and so we'll just have to wait and see what the pattern holds for gold. Silver hit that upsloping trend line, which also was a neckline of a head and shoulders formation, and it hit it. It did not close above it, so it didn't fail, and it is coming back down. Again, I told you that if silver does go up above that neckline, that's bullish for silver. If it comes back down below and continues down, that's very bearish. And of course, the end result of the head and shoulders being this distance here to the neckline and then measured out over here. And we can just do that real quick. We'll find out what that is by clicking there and going up to the top here, or the peak, measuring down here, and that is about 13.92% down. And then I'll clone this and bring it over here to where the neckline is. And so you're talking about a target, if we get a broken target, which right there is actually originally where it broke. If we get that played out, we're talking 1947. So if we get down to about 19 bucks on silver, that's where I will be turning around the truck, so to speak, and backing it up and getting ready to get on board some silver. At this point, I'll be leaving silver alone to see what it does as far as the pattern goes on this head and shoulders. Natural gas, boy, did it back off. I said that it needed to back off and do a little bit more consolidation, but I did not expect this kind of a move. It moved quite a bit down, and we were down 5.76% today with natural gas. And of course, I play this with the the UNG chart, and this chart, if it comes back here and gets into this level, this is my alert to buy. And yesterday I had it just a hair higher, but today I've got it down here. And the reason why I do is because it is a 618 Fibonacci retrace. So if I look and go here, this is just on the daily chart. That's a 618 Fibonacci retrace. If it gets there, that's whenever I'll be inching back in. I've got an average way down here, so I'll inch back in and bring my average up probably right in here as soon as it hits that 618. But with this cold storm passing by, as far as fundamentals go, with the cold storm passing by, it may come back and pull back a little bit more than what I want it to. So you can see the volume was light yesterday in this down candle, and the volume was pretty light. Today it picked back up a little bit, but that was probably a little bit of distribution. Hit this trend line and it blew right through it. So I'm waiting for the 618 retrace to give me a more of a signal to purchase there. U.S. oil still remains in this flag pattern, and this flag pattern, if it fails, it could rocket ship up. And of course, if that happens with if we go to any more wartime footing with the Houthis or with Iran, that could really send us up in the market. But if not, then we got a bearish flag that is telling us that it wants to break lower and come way down here. And I've told you what the targets on that have been before, but if we wound up coming down and breaking the 64.41 level here, then that could really open the floodgates for sell-off in oil all the way down to about 55 or maybe even a little bit lower. So just watch the oil and keep on watching the progress. I wouldn't touch any of the oil stocks myself right now, at least on the long side. It's a little bit too confusing. It's hard to read exactly which way it's going to go. Bitcoin. Your Bitcoin chart, basically, came back into this wedge pattern after it had that big sell-off last couple of days, and came back into this wedge pattern that it has been consolidating in since December the 5th. And so it's back into this pattern. We'll see what happens, whether it stays in here or breaks back out or breaks down. If it breaks this level here, or if it breaks this low, these lows here, right in here, if it breaks those lows around 40,000, then it comes back down into this support level right in here, so around 37 to 35,000, I'd say. All right, as far as the SMH goes, the semiconductors, these are its all-time highs. It actually poked up above that all-time highs, is that right? Yep, all-time highs. So it's poked up above that today, and we'll see what happens. And then if it gets rejected off there, look for support still down in this area, or actually a Fibonacci retrace probably somewhere in that area, probably around here, 618 retrace. But if it comes back down, this is still providing support for it. Apple, I got stopped out of my Apple this morning. I was down in here, and the price just went right through it and stopped me out. I should have probably held my order back a little bit, but it didn't. It came to stop me out, but I was not able to recover that. So anyway, I'm out of Apple, but I got out of it at break even. Tesla went right into my level of support here. I had added, I got into the play right in here, so I'm almost at break even right now, but whenever it came down, it went right into my level of support and then bounced back up. So Tesla lives to fight another day, and it is coming back up, and it has still got a downsloping trend line here. I'm not sure exactly how long I'll hold on to this. I will probably wait for it to go up maybe 1 or 2%, and then I'll probably sell out of it, or at least at a break even, because Tesla's just not looking real healthy right now as far as the stock price goes. NVIDIA is still a powerhouse, and I left these measured move levels on here. I mentioned those yesterday in the update brief on the market, and I wanted to show you what this is. This is a 28.85% move, or 113.18, and this is what measured moves look like. This is how you measure measured moves, and markets love to repeat. So if the measured move plays out, we're talking $586. I think I said $585.50 yesterday. $586 if the measured move plays out. And I'll show you another measured move here in just a minute, but you'll see that they like to repeat themselves. The market likes to repeat itself in its moves. So we'll see that here in just a minute. Microsoft still has that big breakout going on, and it's came back in a little bit today. This is at all-time highs, so we don't know where it's going to go. We really don't have anything to play off of up here. However, if it comes back and does a retrace to this line, well, I'll be a buyer at that point of Microsoft going up. Meta has this is where I want to show you the mirrored move. If we take that price action, we draw it from this low here up to this move before the pullback came, we get $63.52. Okay, and now I'm going to take that and I'm going to clone it, and I'm going to move it up here, and I'm going to move it right to here. And you're almost exactly at a measured move. Now, it did have a pullback in the middle of that, and that's okay as long as it's a normal pullback. And we had a pullback here, so you could technically say that that was not an exactly measured move. But look where our next pullback came to. I mean, it's like almost exactly 63.52. So I mean, it's the markets love to repeat, and you can do your own study on this and just go through and take a look at charts and look at the different times that the market has repeated itself, especially in specific charts of exactly almost to the penny where things like to repeat at. But anyway, that's kind of what I look at. It's not anything you would trade off of. It's something that just gives you an idea of where things might go. All right, so this is Meta's move today, and Meta had a pullback on shit needed to. It needs to do a little consolidation. It is overbought on both the daily and on the weekly. Netflix also had a pullback here, and Netflix has got this it's still got higher highs and higher lows in here, so I'm not really worried about Netflix at all. It's still looking good, and it is really not overbought on the daily, but it is slightly overbought on the weekly, so it may do some more backing and filling on Netflix. And there's the let's see what that represents. That line there represents just some consolidation and some resistance points. So if we consolidate below that line for another few days, it could probably blow through it. But if it doesn't, it may pull back at that line. And lastly, Google. We got Google here, and Google is doing real good. No problems with the chart whatsoever. You can see this good on the weekly here. You can see this inside bar pattern that blew up here, and we'll look and see whether or not it makes a little bit more consolidation and has another move up. And we'll see what each line represents. This represents some good resistance before it gets up to its all-time highs here. All right, well, that is your daily brief. I don't think there's anything that is going on this week that I need to... Oh, there is something big. On Friday, we have options expirations, and so there could be some game playing that happens, institutional game playing that happens in the S&P and on the NASDAQ. Look for crazy, wild moves, and we'll just have to wait and see what that is. But you'll see little news stories come out here and there to try to move stocks different places. And that is just because institutions are trying to maneuver the stock prices and the market where they want it to, so that they can make the most money off of the options as they expire. All right, this is the end of our daily video, and this is Copycat Trader signing off. I hope everybody has a great day.